Hi guys! Welcome to my channel. So before we get started, hit that like button and subscribe to my channel. In this video, we will talk about how to cancel debt. So make sure to watch the full video. If you borrow money and are legally obligated to repay a fixed or determinable amount at a future date, you have a debt. You may be personally liable for a debt or may own a property that's subject to a debt. If your debt is forgiven or discharged for less than the full amount you owe, the debt is considered canceled in the amount that you don't have to pay. The law provides several exceptions, however, in which the amount you don't have to pay isn't canceled debt. These exceptions will be discussed later. Cancellation of a debt may occur if the creditor can't collect or gives up on collecting the amount you're obligated to pay. If you own property subject to a debt, cancellation of the debt also may occur. Because of a foreclosure, a repossession, a voluntary transfer of the property to the lender, abandonment of the property, or a mortgage modification. In general, if you have cancellation of debt income because your debt is canceled, forgiven, or discharged for less than the amount you must pay, the amount of the canceled debt is taxable, and you must report the canceled debt on your tax return for the year the cancellation occurs. The canceled debt isn't taxable, however, if the law specifically allows you to exclude it from gross income. These specific exclusions will be discussed later. After a debt is canceled, the creditor may send you a Form 1099-C, cancellation of debt, showing the amount of cancellation of debt and the date of cancellation, among other things. If you received a Form 1099-C showing incorrect information, contact the creditor to make corrections. For example, if the creditor is continuing to try to collect the debt after sending you a Form 1099-C, the creditor may not have canceled the debt, and as a result, you may not have income from a canceled debt. You should verify with the creditor your specific situation. Your responsibility to report the taxable amount of canceled debt as income on your tax return for the year when the cancellation occurs doesn't change whether or not you receive a correct Form 1099-C. Understanding cancellation of debt. Distressed borrowers can work directly with a creditor to negotiate debt relief. Many distressed borrowers may choose to file for bankruptcy or work with a debt relief program that can lower a borrower's total debt. The main impact of cancellation of debt is the legal requirement to pay taxes on the amount that has been forgiven, as the Internal Revenue Service, IRS, counts this canceled amount as income. When obtaining debt relief, borrowers should plan ahead for taxes on potential savings expected from the cancellation of debt. Individuals will have to file Form 1099-C if the canceled debt amount is $600 or more. The cancellation of debt can greatly help provide relief to a distressed borrower. In some cases, debt forgiveness may also be offered between countries for economic support. How does cancellation of debt work? The cancellation of debt is the result of a process that either the borrower or the lender initiates. It could be that a creditor is unable to collect a debt or part of the debt, and so it writes off the debt. Or the borrower may work with the creditor to negotiate the amount of debt owed either on their own or through a debt relief company. Finally, debt may be canceled if the borrower qualifies for loan forgiveness, which is common when it comes to student loans. In most cases, if a cancellation of debt occurs, the amount is taxable and must be reported on your tax return. However, there are some exclusions specified by the IRS. Reporting the cancellation of debt on IRS Form 1099-C. Any lender or creditor that cancels $600 or more of your debt will have to file Form 1099-C with the IRS and send you a copy so you'll have it come tax filing time. That amount of canceled debt is already being reported, so if you don't include it on your taxes, you're inviting a potential tax audit down the road. Therefore, any 1099-Cs you receive must be included when you file your taxes. Do I have to pay taxes on my canceled debt? In most situations, canceled debt is considered income, therefore you must pay taxes on it. For example, say you took out a personal loan for $10,000, but were unable to pay back the remaining $3,000 of it due to financial hardships. If you are able to successfully negotiate with the lender to cancel that remaining amount owed, the IRS considers that $3,000 to be income, since you were given funds that weren't repaid. In some cases, though, canceled debt will not be counted as taxable income. While you may still need to report the debt even if you qualify for one of the exceptions, it won't affect your gross income. You may qualify for an exception or exclusion if you file for bankruptcy. If a portion or all of your debt is discharged in bankruptcy, you may not have to include it as taxable income. This is because bankruptcy is intended to help you get back on your feet financially, and the last thing you need is an unexpected tax bill. You are insolvent. Insolvency refers to situations in which a person owes more than their assets are worth. If this is the case for you, the IRS may allow you to exclude some or all of your canceled debt, but you'll have to prove you are insolvent. A family or friend says you don't have to pay back their loan. If your family or friend forgives a loan they made you, that debt typically does not have to go on your taxes. So if Aunt Sally tells you that you don't have to pay back the $2,000 she lent you for college, it would be considered a gift that you get to keep. Interest on a canceled loan debt is tax deductible. For some business or home mortgages that have tax-deductible interest, you only have to report the portion of the canceled debt that came from the principal owed. You qualify for certain student loan forgiveness. There are a couple of federal student loan forgiveness programs for teachers or those who perform certain kinds of service, and those types of canceled debt do not count. Also, if you become permanently disabled or someone passes away, and their remaining student loans are discharged, that is not taxable income. You're eligible for a farm or real estate debt exclusion. There could be an IRS exclusion for certain debts involving farm or real estate, but there are specific eligibility requirements that must be met. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.